In this video, I'm gonna be giving you guys 17 reasons why you shouldn't be buying real estate in 2025. Starting off with reason number one, there's really no rush to buy real estate. Now, if you're buying a detached home, I could make an argument that there should be a little bit more urgency. I don't think detached homes have a lot of downside yet to happen. And I think for the most part, they're going to be flat or in the up direction, generally speaking. But if we're talking about condos or townhomes, I don't see any upside happening in the next 6 months to a year. And condos potentially even into 2027. It doesn't look like there is much upside to be had. And it's very possible that the situation actually improves as time goes on for home buyers and first-time home buyers. Maybe interest rates come down, maybe prices come down a little bit. So, I mean, number one, I think is pretty obvious. There's just really no rush. There's nothing causing you to be urgent about this decision. Number two is Canada, generally speaking, is going downhill overall. When people used to buy real estate, they would say, hey, listen, this country is getting more productive, their economy is improving, they're becoming an economic powerhouse, the future looks bright, therefore I want to own some dirt in this country, understanding that the overall circumstances will improve, thus it should push up the value of my property. However, that's not the case, and the exact opposite has been playing out. The country has been getting so much worse that we are just flooding our economy with basically synthetic liquidity that is then pushing up asset values. But it's actually not a good thing at all, and it's making the situation much, much worse. But if you look at fundamental investing, that is typically not how you're supposed to invest. That's just what people have been forced to do because there's been no way to make a safe return in the last decade when inflation's at 10, 12%. You're kind of forced to speculate on assets, and that has been largely what has been a big contributor to asset valuations going up. So number two, I think is obvious, and I think, people will get mad. You try to argue that Canada is getting worse as a country. I mean, just go look at any chart, GDP per capita, the societal fabric of this country. There's so much bickering and fighting and arguing and all of these things. And I think it's pretty obvious to say that the country has been getting worse. Number three, rents are falling, and there's a few reasons why you wouldn't buy because of this. First one being the obvious one is that if you're a renter, well, now you can just go get a cheaper rent. The rents are substantially cheaper in comparison to the purchase price. Number four, there is a lot more inventory coming this year with pre-sale projects that were purchased in 2021 and 2022 now finished being built this year, and same with 2026. And then if you look in 2026, 2027, there's a lot of rental, purpose-built rental housing getting completed. And all of this new inventory coming to market is going to do a couple things. One, it's going to keep rents stable or possibly going down. And two, it is also going to keep prices from rising, specifically in the condo market. Number five, cap rates, which is basically the rent in comparison to the expenses associated with the property, are at the lowest they've probably ever been. Ever. And if you're an investor, they just make very little sense. Now, that being said, they've pretty much never made sense, and you just bought, knowing that in the next 3 to 4 years, rents would go up and then the cap rates would start to make sense and asset values would probably go up as well. But currently right now, if you're an investor, there's a very strong argument to be made that I'm just gonna go buy US equities, or I'm gonna buy gold, or I'm gonna buy crypto, or I'm gonna buy almost anything else as opposed to taking on this risk and buying an asset where the cap rates don't make a lot of sense. And not only that, the cap rates are actually expected to get worse with rents falling. Number six, and I kind of alluded to this earlier, number three, but it is substantially cheaper to rent right now. Not only have rents fallen while the price of homes have largely remained flat and interest rates have gone up, also the maintenance costs associated with owning that home, the insurance, the strata fees, and all the other maintenance have also gone up. So as a renter, you obviously don't pay a mortgage or any of the maintenance costs or taxes associated. All of those things have gone up while rent has gone down, even widening that gap and making it even cheaper to rent than it was before. And if you're a renter right now and you're somewhat savvy, it makes more sense to start a business or invest in the stock market and maybe pick stocks as opposed to just buying the S&P 500. Again, very difficult for most people to successfully do this, but if you can, there's a very strong argument to be made that it's better to rent, start your own business, or invest in something else. Number seven, population growth in Canada is expected to be flat or possibly negative over the next few years. Now, I think for obvious reasons, this is going to stunt growth within the prices of the housing market. Population growth is demand for housing. So if the demand for housing is dropping and the supply is increasing, well, then the prices would typically go down. At least that's what fundamental investing or fundamental supply and demand would tell you. Number 8, tenant rules, and you've heard me talk about this, are completely ridiculous. It is extremely risky as a landlord these days that you rent to the wrong person, they trash your house, they don't pay you any rent, and it takes months and months to get that person out, and then you have to, do some renovations and re-rent out the place, and hopefully you don't get a tenant similar to the last one. So if you're an investor, the cap rates suck historically speaking, and then you have increased risk with tenants because the tenant rules are heavily favored towards the tenant these days. Number 9, unemployment is rising, and this one is one of the worst ones of the things on this list, because if unemployment continues to rise and people don't have jobs, well, then they're obviously not going to be paying their mortgages. They're going to be forced to sell, and that forced selling could push down prices even faster than what we initially thought was possible. Number 10, the Canadian dollar is dropping. Now, this could actually be a positive for home prices. I actually think it's a positive, and I'm gonna do a whole nother video with the 17 reasons why I think you should buy a house after this video. But generally speaking, if home prices stay flat or go down simultaneously with the Canadian dollar dropping, well, if the price of your home is denominated in Canadian dollars and it stays flat, it's the same price that it was last year, and the Canadian dollar drops 5%, well, you just lost 5% value because that home price is denominated in Canadian dollars. On the flip side of that, if the house goes up 5% and the Canadian dollar goes down 5%, in real terms, if you're a cash buyer of that house, you haven't made any money. But because your money is leveraged at 5x, you've actually still made about 20% return on your money. Because if a home goes up 5%, well, it didn't actually go up 5%, it went up 25, it's a 25% return on your 20% down payment. So it just depends how you're buying the home, but typically speaking, if you're leveraged at 5x and the price of the home goes up while the Canadian dollar is dropping, you're still netting a return on that investment. Number 11, there is a lot of pent-up seller demand. All the time I hear people talk about pent-up buyer demand. Oh, there's people who've been waiting, who want to buy, who haven't been able to buy because of this, that, and the other. Dude, I talk to a lot of sellers who have been waiting and waiting and waiting. I turn down almost a listing every single day at this point with a seller who just wants a little bit too much money, and I know it's not going to sell, and it always ends the same way. 2-3 months down the road, they're mad at me, and then we terminate the listing, and then that kind of hurts the relationship. So I'm just not taking on those listings anymore. But I talk to a lot of sellers who have been waiting and waiting and waiting for the prices to come back up so they can finally exit the market. And what I think is going to happen is, even if the prices do go back up at some point, you're probably going to see a wall of sellers dump their properties onto the market, finally being able to get their price and get out of the market. And again, I do believe that this will suppress price growth for at least the next couple years. Number 12, Vancouver real estate could be in a bubble. We don't know if it is, and there's been a lot of people talking about this for many years. It could be, right? I'm not an economist. I am not a fortune teller. I can also make a lot of arguments for why it isn't in a bubble, but it could be. Number 13, a black swan event is almost a guarantee at this point. There is so much going on, so much volatility, so much civil unrest, that there is likely going to be something, just like there has been at least a couple times per year in the last couple years. Something is going to come up that is going to break the current imbalance within the house, or the current balance, I should say, within the housing market, where things have been trading flat for the last 3 years. That is going to cause prices to either go down or go up. Which brings me to my next point, number 14. Trump tariffs could be the black swan event that I'm talking about. Trump just yesterday put tariffs on Canadian goods, and this will likely cause some type of reaction from the Canadian government. They're talking about retaliatory tariffs, which are probably coming, but it could also cause QE, money printing, stimulus, more types of things. It could cause unemployment. It could cause a whole bunch of things, and it's very difficult to say what the exact outcome of this is going to be, but it's definitely going to be something. And number 15, there are other investment vehicles with far less risk, I would say, at the moment. Like I said, you could buy US equities if you're very smart and pick stocks and just bet on one individual business as opposed to the health of an entire country. You know, even crypto could be perceived less risky depending on what you're buying in crypto. You can buy gold, you can buy silver. There are other ways that you can get a return on your money, hedge against inflation and all these types of things. And number 16, the interest rates are high. People will argue that they are historically low right now. I don't think that's the case at all. I think interest rates are high. I think you have to account for where our debt levels are today, and 4.5% is a high interest rate. And it's especially high when you factor in the price of homes, when you factor in the rents, and again, when you factor in the levels of debt that people have to take on to buy a house. And my last one, which I think is the most interesting, is where is population going long term? Birth rates have been collapsing basically for the last 50 years, pretty much going lower and lower every single year. And people say buy land, they're not making any more of it. And I think that argument only stands if we're making more people. Because if there are less people, well then the demand for land won't be as great. If the population of Vancouver were to be cut in half, well then the prices of property would probably be cut in half.
Where'd he go? Where'd he go?
Steve?
And obviously that's not going to happen, but what I'm saying as it pertains to growth rates when buying real estate, if population across the world is declining, it doesn't necessarily give me a great bull case for real estate 30, 40, 50 years from now. But again, who knows? These are just the 17 reasons that I could think of for why you shouldn't buy real estate in 2025. Now, if you want to watch the video on why I think, or the 17 reasons why you should buy real estate, I'm going to drop it right here. Otherwise, I'm that Agent Kelly, and I'm making moves to move you. Peace.